Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, also help you with all the wrap-up of what happened through the day's trade in terms of the stock market benchmark moves, the sectoral indices, the stocks that have been buzzing through the day, and the update on the Adani Group of stocks as well. And also going forward from here, what do experts really make of the kind of strategies that investors must adopt in this current volatile scenario of the markets? How can you really go on to protect your capital and continue to increase profits, whereas reduce any kind of chances of losses right there too. We'll also get you the expert views, but first up, a quick check on how the markets are doing at this point in time. Well, the markets are slipping away as we inch closer to the closing action on the D Street. About 50 points gone there now for the Nifty 50. It's near that 17,500 odd mark and down about 0.3%. The Sensex is inching lower as well, 160 points of a cut being seen for that one. 59,588 the current level, again a 0.3%, which is lower right here. We were seeing throughout the trading session that the markets were just flat with a negative bias, but that 3 p.m. move on the expiry session is perhaps kicking in and you're seeing the markets drift even lower as we speak. The India VIX is right now holding up at 15.1, not too much of a change right there. The mid and the small cap are showing actually a divergent trend, with the mid caps inching lower, but the small caps holding up above that flat line. Although just about flat, no, that's also now slipped lower, about 0.1% of a downtick for that one. In terms of the sectors, now you're seeing a deeper cut coming in on the realty pack, 1.6% down for this one, almost a 2% cut for the media stocks. That has lifted off the lowest point of the day for sure. The Nifty Bank is down by 0.1% or so, so that's also seen slight recovery coming in. Autos are down by 0.1%, financial services 0.2% lower, pharma is down in trade as well. The only sectors that are perhaps holding up into the green are the FMCG stocks, about 0.25% up, metals that are 0.2% higher, PSU banks flat with a positive bias. The market breadth is skewed slightly towards the declines, with 26 declines to 23 advances as far as the Nifty 50 stocks are concerned. The stocks creating pressure today: Asian Paints, Adani Enterprises down 2%, IndusInd Bank, L&T, HDFC Life. On the other hand, you do have some of the commodity names, metals, coal, all of those are moving up in trade. So Coal India is up, Hindalco is up, ITC from the FMCG basket holding up, Axis Bank and ONGC, some of those names also kicking up in trade right here. But time now to welcome our guest for the session. We have with us Mr. Sunil Damania, CIO of MarketMojo, joining in. Mr. Damania, good afternoon and thank you so much for taking the time out for this discussion. Well, first up, your thoughts on the overall markets. We've been constantly revisiting this question as to when will the markets really break out of this range and what will it take for the markets to break out. But now the question is, from the last 3-4 trading session when we've been seeing continuous cuts in the markets, do you think or anticipate any kind of a downward spiral really kicking in, and what is becoming a bigger worry for the markets right now? Is it still the Adani factor or something more macro?
Thanks, Sakshi, and thanks for having me on the show. I think, yes, you are right that market is looking at various permutations and combinations in terms of the scenarios. Like, one is definitely an Adani Group, and I don't think Adani Group is a sentiment spoiler for the overall market. Whatever damage has to happen, it's already happening in the Adani Group. I think what market is little more concerned about what's going to be the trajectory for the rate of interest going forward. It does give a feeling that in US, people are making a prediction that there will be 75 bips more rate hike, 25 bips on 22nd March, and subsequent two Fed rate meeting. We could see another 25 bips rate hike more. That's what the market is fearing from the US front. If you look at the data that came out on the inflation from the ECB, that seemed to be going up. India inflation in month of January was little higher. And if you happen to read the MPC meeting, minutes of the meeting, they do indicate that I think we are here for a little longer period in terms of the core inflation sustaining at the higher level. And last but not the least, I think the something El Nino effect seems to be now started playing out in the market sentiment. There has been a heat wave in the northern belt.
Yeah.
There are fear now that Rabi crop, the wheat output may not be as high as what was initially expected. And if the monsoon is going to below par, I'm not saying it's going to fail, but if it's going to be below
Hmm.
par, and
Hmm.
some they fear that El Nino may kick in somewhere by second week of July or so. And if that happens, I think the complete we are heading towards a much more severe problem. And if that happens, inflation could further spike up. So there are various, we all know sugarcane production is less, due to that sugar production would be less. So I think the market is trying to looking at various negative factors, and one doesn't know what can come next because in last 1.5 years, we have seen all negative factors and coming from nowhere. No one would have expected that we could have, Russia-Ukraine war and going on for more than a year. No one would have expected inflation remains so sticky and Fed would hike 425 bips rate hike in a single calendar year, which has never happened in the history of US Fed. So I think it's all negative news. So it's very difficult to say what will next come and can spook the market sentiment. As a long-term investors, we always see as a one thing, and silver lining is that when the market sentiments are bad, it's a time for you to go more courageous and put money, like taking a cue from what Warren Buffett has said, be greedy when others are fearful. And today people are fearful. People are wondering about market would go down. When you fast forward 6 months down the line, and you
Yeah.
would realize how if I was brave in this market to invest, I would have made a lot of money. So I personally believe you should remain constructively positive on the market. Use every day to add more money to the equity market.
Right. But what is pulling the FIIs away then? Why are they running away from? Is it the high valuations right now, or is it that China and Hong Kong are looking more attractive at this point in time? Is the Adani Group factor pushing them away? What is really happening there?
I think the last factor could be the most probable reason is the Adani Group. If you look at the dissect the data for month of January and for the month of February for the FIIs,
Hmm.
January they almost sold near about 29,000 crore or so. In the month of Feb, if my memory serves me right, they only sold 10% of what they sold
Hmm.
in the month of January. So it's not that FIIs are on an aggressive selling spree. On the contrary, they have reduced the selling in the month of Feb as compared to in month of Jan. So they've slowed down, and whatever that selling would have taken place more to do with the Adani Group than what China or Hong Kong
Hmm.
opening up stuff. That story seems to have played out in the month of Jan itself. I don't think that story now is being played out in the month of Feb.
Okay, okay. As an update today, what we've come to know is since we're talking about the Adani Group, one more comment there, and then we can move on to the other important sectors of the markets that are also attracting some bit of buzzing move. Is that the LIC's investment in the Adani Group? The value of LIC's investments in the group companies has now turned negative. As per our research, also, I can actually tell you that. The purchase value of equity of the LIC in Adani Group was 30,127 odd crore rupees in December of 2022. But as in the afternoon trade of February 22, it has slipped to 26,888 crores. That indicates a fall of about 39 crore rupees as well. What does it really mean? I mean, this raises a question as to whether LIC has actually sold some shares or some of its holding in the Adani Group. Do you think that has caused this into the negative sphere?
So my sense is that it purely because of the fluctuation that happened in the price of the downward trend that we saw in the price of Adani Group. I don't think LIC would have sold. And my gut feeling tells me that LIC could have actually or may have bought more of the Adani Group shares in the falling market. That's what my sense is. But this data is not available in the public domain. At least I'm not aware about. And
Hmm.
I think the data that you talk about purely may be because of the erosion in the value of the Adani Group shares. That could be the plausible explanation for the decline in the value of LIC holding in Adani Group.
Okay, so what should be investors' strategy now or the Adani Group? We've seen throughout this week not just that the Adani Group's market cap as a whole has slipped below the 8 lakh crore rupees mark as well, and there has been no stemming of the kind of fall that we have seen. Of course, there was new development from the Wikipedia space as well that further dented the sentiments, and this is despite the corrective actions that the Adani Group is now taking. The focus towards the preserving of the cash, for example, prepaying most of the debt, for example, not really focusing on the debt fueled expansion right here. So we are looking at slight indications on the kind of financially prudent measures that the group may be taking, but nothing seems to be actually helping out the fall that we have been seeing right here.
So, Sakshi, we have been very consistent on this channel. Every time when we spoke about Adani Group, our advice has been clearly to stay away. I distinctly recollect you asked me in case if someone wished to, and I said it is not meant for the light-hearted, and I said someone has a strong heart, and if at all they want to take an exposure, We
Sure.
did mention about ACC and Ambuja Cement because that's a cement business,
Yeah.
relatively rock solid, and this one. But I think
Hmm.
Adani Group will continue to face a lot of selling pressure. Number one, the reason is very obvious. If you go by the history of what has happened, whenever there is a fear of corporate governance, those group either never bounce back. There have been various examples I can give you. One was PC Jeweler, another one was Wakrangi. We saw
Hmm.
and beverages and so on and so forth. So once your image comes under pressure, I think no one wants to be really invest in your company, and that creates a lot of downward pressure. Now you did mention about that. They are taking some measures to reduce their capex and so on and so forth. But I think one of the big fundamental theory which was driving Adani Group share price was the growth story. They were
Hmm.
a little aggressive in. Now the basic tenet goes of it's like when Sachin Tendulkar or Virat, what we call Sehwag start playing like a Dravid, no
Yeah.
one likes it, right? So I think that's where that's I think so that's another concern that it seems that while Adani Group wants to preserve cash, but if it comes at the cost of growth, I
Hmm.
think people still not be very happy about it. So my sense is that Adani Group may continue to underperform in the foreseeable future.
Okay, understood that. So then if not the Adani Group, where can actually one hide in this kind of a volatile market? Which is a safer space according to you?
So again, we are very consistent. If you remember, Sakshi, we did mention about that IT looks extremely promising,
Yes.
and I did at that point of time it's a contra call, and at that
Yes.
point of time it was a contra call, and it did play out very well. Even if you look at last 1 month or YTD returns from IT Group, they have done extremely well. Now,
Absolutely.
and if you look at what is happening in the US is showing a lot of resilience. Like one biggest fear we all had at somewhere in the fag end of December 2022 was that
Hmm.
US is going to go into the recession kind of a stuff. And if that
Hmm.
is so, spending will come to a standstill or will go down. Nothing that sort of is happening. So our sense is that IT, no corporate governance issue, rock solid business, even if the Indian economy has to slow down maybe because of monsoon related factors and so on and so forth. I
Sure.
think the IT companies will do extremely well. My sense is that please park your funds. It's still not too late. I do
Okay.
understand it is by in double digit in 2023, but still a lot of scope to make money in the IT group companies.
So one should one stick with the top three or four names here in the large cap space, or should one also diversify, look into some of the mid cap as well?
So they're very interesting. I will not name the company, but there are some interesting company within the mid cap space also doing something excellent job in terms of automation of the car and so on and so forth. So they are more into engineering of the automation part of the complete automobile business or manufacturing 3.0. I think one should look at those kind of a company because why they would command a better price to earning ratio. Number one, number two, they would grow much faster than the normal IT services companies. So my sense is
Hmm.
that it's a mix of large as well as mid caps.
Okay, understood that. So apart from IT also, if I have to ask you, we did speak about the auto space also in our previous interaction as well. How does that look as far as the current market scenario is concerned?
So our sense is that auto will have a little mixed performance. I think
Hmm.
definitely we are seeing some kind of a slowdown in the two wheeler, and if the monsoon is not to be likely to be good, it
Yeah.
definitely impact a lot of demand from the rural India, and auto two wheelers are more consumed in the rural India as compared to the urban India. So that's one part. Even
Hmm.
tractor can come under pressure if the monsoon is not so good. Uh, Commercial vehicles space seems to be doing reasonably well. And if you know one big player today, there are news that they are going to divest some stake for the EV business.
Hmm.
And Uber recently tied up with that auto company for the larger number of electrical vehicle. So I
Hmm.
think the, the passenger car vehicle seems to be doing reasonably well. That's what we get sense. And something with the commercial space. I think these two
Okay.
segments, the auto should do well, but not tractor and not the two wheeler at this point of
Okay,
time.
okay, okay, understood. And you know, we have seen the Q3 earnings also now behind us. Post these earnings, where have the maximum upgrades and the downgrades really come in for you specifically?
So one clear-cut upgrade has been the IT for us
Yeah.
because if you look at the number of attrition rate has started coming down. Commentary has been quite reasonably quite good, barring one or two players. All have been saying that they don't see much of a stress in the business and their revenue visibility also relatively good. Infra space seems to be doing reasonably well, and that's definitely call for an upgrade because new projects are being a big lineup. They are getting new projects. The input cost pressure have started coming down, and that would help them to expand some margins by a few percentage point. So another thing, the budget has been extremely good in terms of the infra because 10 lakh crore kind of a capex that we are talking about that
Hmm.
should further growth in their order book position. So I think IT looks promising to us. Infra looks promising to us post Q3 numbers. And I think chemical, we personally believe is an area which strictly no. Why? Because the prices have come down, the volume seems to be a concern. And once we look at the number for March 2023, some of the chemical companies would were really disappointed. So instead of waiting for
Sure.
the number to come out and get out of it, maybe it's a time to lock in some of the profits within the chemical space post Q3 numbers.
Okay, understood that. Well, thank you so much, Mr. Damania, for being with us on the show and speaking to us about these various sectors and stocks that we've just discussed and the overall approach of investors in this current volatile market as well. And many thanks. Always a pleasure having you with us. We'll continue to do more market interactions going forward as well. Right now, if we speak, let's take a look at how the benchmarks are moving, drifting lower. 160 points of a cut right now for the Sensex and about a 46 point of a loss for the Nifty 50 as well. The Nifty is just holding up above that 17,500 mark, 59,590. That's the level at which the Sensex is also trading, about 0.3% lower in trade. About 11 minutes remaining for the markets to shut shop, but looks like it could be another session and the expiry session that we could have in the negative zone as well. We'll continue to keep focus on the market move going forward as well and keep helping you with all the expert takes too. And for that, you should stick with us on Business Today TV. Don't forget to subscribe to this channel and also stick with us via other social media platforms, Facebook, Twitter, LinkedIn and Instagram. Till then, many thanks for tuning in.